Dom Chu, first off, before we navigate, am I wrong about that? Could we say that Meta's 20-day run is epic?
I in my mind, covering the markets that I have.
Giant brain.
And trading the markets before that on my career on Wall Street. I think a 20-session run like Meta has had would stand out to me. Right? I wouldn't say historic because I don't have those numbers in my head.
It doesn't need fact-checking.
But to see a stock that's a mega cap go up for 20 days in a row, it's not the same as going to a blackjack table and saying, hey, I won 20 hands in a row. But it's kind of, you get that feeling, right? It's a big winning streak.
Well, I like you, Dom.
It's a big winning streak.
Oh, he's all right.
Anyway, let's talk about the gold prices right now, because gold is up just about 50% in the last 12 months, a pretty good run of itself. Political uncertainty has made it one of those safe havens of choice. One futures trader, though, thinks it will go even higher still and is playing the commodity outright through the futures market. So joining us now is the killer, Jeff Kilberg, founder and CEO of KKM Financial. He's also, of course, a CNBC contributor, a frequent guest on this program.
And a nice guy, despite the
nickname.
Just
a nice guy. And a Notre Dame football alum. So let's talk a little bit about gold prices and those gold helmets. How much can gold go higher, Jeff, in your mind?
Well, Dom, gold certainly is near and dear to my heart, but I think it has the ability to vault over 3,000. That's my short-term target. But there's three inputs, Dom. First being inflation. It seems like no other market has really been concerned. The stock market certainly wasn't bothered by the inflationary data that was hotter than expected last week, but gold was. We're seeing a $50 range today, and yes, it's at the higher end of the range, but there's also a component of the U.S. dollar. Think about the dollar, Dom. It's been higher ever since election day. I know it's backed off a little bit off of 110, but we've seen gold move higher in the face of a stronger U.S. dollar. That's impressive. And lastly, I don't want to start the rumor mill, but we are talking all weekend. We heard buzz. Are we short some gold bullion at Fort Knox? There's supposed to be 143 million troy ounces at Fort Knox. We will see. But there's a bid in gold, and I think that's why it's going up above 3,000.
So so if you play the futures market and you target the way that you have, this particular market is a leveraged market, so it's not a dollar-for-dollar return. How exactly then do you risk manage these situations, and why are your stops so tight and your profit levels so tight in this?
So it's funny, I thought these stops were kind of wide. It all depends on your perspective, right? But I think if you look at the valuation, so right now this April futures contract, I bought it at 2,930 this morning. It's up towards the highs right now. It's actually trading on the high. But if you think about every dollar move in this futures contract is going to be $100 plus or minus. So if the gold futures move $10, that's a $1,000 swing. So I have a stop down just in the event we see some tariff conversation continue to dissipate and we move back under, because it's been sideways for like the last month, kind of attached to 2,900, but I think we get a vault above here. I think we just have one last leg here, but I do only have a $70 move here, Dom, because pigs get fat, hogs get slaughtered when you trade futures.
All right, and then one more point here. As we talk about the gold trade itself, fundamentally speaking, is there a reason why you think there could be potential downside? What exactly would then trigger what you think would be a move lower in those prices, given the fact that we have everything going with tariffs and trade and the markets at record highs and everything else?
So I think what triggers the downside, if we see the central bank buying dissipate. Last 3 consecutive years, Don, we've collectively seen China, India, Russia. They bought collectively over 1,000 metric tons of gold. I think we're on pace again for 2025. In the event we see them walk away from buying, that's how it comes back off. But that type of buying, there's concerns about currency wars, trade tariffs. That's why the central bankers are hoarding the gold right now, and that's why gold is going to continue its upward trajectory, in my opinion.
All right. Jeff Kilberg for the Trade on Gold. Thank you very much.
See you,
we'll see you soon.